Barry, welcome, and thanks so much for joining us.
Thanks, Catherine. Really good to see you again.
Thank you. Prior to us pre-taping, just kind of before we got on, you said, what an interesting week it's been in the markets. For somebody who's been in the markets for so many years, decades, what do you mean by that?
Well, certainly, whenever the Fed is going through a rate hike cycle, then volatility is always elevated. And this time is no different. But there is a lot of things that are unique about this cycle because we've never had a pandemic before, and we're not really used to the recovery and the recession characteristics. It's not like a normal recession we've had when things just get overheated and then the Fed has to hike rates. And in fact, for the last almost 20 years, the Fed has been essentially cutting rates and quantitative easing to fight deflation. And now we're back to fighting inflation. So a lot of people in the markets aren't used to that.
Well, a lot of people aren't used to it, and we also don't know how to interpret all the different factors. For example, Barry, some would say that if you look at the employment data with decade low employment, that's indicating that we're not in a recession. I mean, how do you dovetail all the different factors? Where do you actually think we are right now in the economy?
Yeah, so I think the economy is slowing pretty dramatically. But the one area that isn't showing indication of that is the employment markets. We're still almost at record low unemployment levels. Jobless claims numbers came out this morning. They were barely above 200,000, which is close to the bottom end of that range. But I think that's one of the unique things about the pandemic. There's a shortage of labor because an enormous number of people left the workforce during the pandemic for a whole bunch of reasons, some good, some bad. And I think that if you talk to companies, most of the companies are saying they're expecting to lay off people in the next year, but they're not doing it yet. And I think it's going to be one of those things where employment holds in, and then all of a sudden goes in the other direction almost violently, where you'll see some pretty big negative non-farm payroll numbers and some pretty significantly rising jobless claims numbers. But we're not there yet. And that's one of the conundrums where, it's scaring the market and making people think that the Fed has to raise rates even further than they have, which I think would be a mistake, but we'll see.
So, if we go back maybe a month or so ago when we actually saw the markets move higher, it was almost because the investors believed that we were seeing peak inflation, that the Fed would in fact have to pull it back or pause or what have you. Do you think that's going to be the case? We only have about 15 more seconds in this segment, but quick thoughts there?
Yeah, well, I think the market had it wrong 2 months ago at the June lows, and I think they've got it wrong now. And we can go into why I think that in shortly.
Yeah. Okay, we're going to take a quick break. As I said, there's so many different moving pieces and parts of the market, probably more so than we've ever seen in the past decade since the financial crisis. We know that the Fed really lifted all areas of the market, all risk on assets. It's a different vehicle and environment now. We'll be right back.